welcome back to the Next Big Thing podcast. My name is Chris Gennady, Global Head of Research at WisdomTree. And today I'm joined by my colleague, Pierre Debru, our essentially head of quantitative research and multi-asset solutions. And we are going to be talking about thematic investing, and in particular, the construction of a multi-thematic exposure. Many people might be familiar with the idea of, say, artificial intelligence, particularly this year. But what we're talking about here is when people want to, maybe in one investment solution, not only select artificial intelligence or cybersecurity or you name it, but rather pick one investment strategy and have an exposure across many different themes. So that's going to be our topic for today. Before we begin, I do need to state the following to clarify. The views and opinions expressed in this podcast are those of WisdomTree and are subject to change. Anything we present in this podcast is not intended to be relied on as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results. And so with that, Pierre, it always makes sense to talk a bit about your background, just for the benefit of the audience. What's been your experience so far at WisdomTree, and what are some of the things you've done prior?
Yeah, of course. So first of all, thanks, Chris, for having me on this podcast. I'm looking forward to discuss multi-thematic with you. It's something that I've been working on for a long time at WisdomTree, and that's always very exciting. Now, if we look back a little bit from a background point of view, as the accent kind of give me away, I'm a French engineer by trade, with a specialty around financial mathematics. I've been working in finance for the last 19 years, pretty much, covering equity derivatives, structured products, and for the last 10 years or so, ETF, with more of a focus on factor strategies and thematic equities. And so for the last 5 years, I've been at WisdomTree, as Chris was saying, heading the quantitative research, but very much focusing on fundamental weighted strategies, factor investing type strategies, thematic equities research, and also portfolio construction or model portfolio construction, if we want to call them like this. And so obviously multi-thematic is a very interesting topic, because it kind of sits in the middle of all of those area, being, of course, a portfolio, but also thematic, and also in some way some fundamental weighting. So it's a very exciting topic at the end of the day.
Thematic is an interesting one in the sense that I feel like if I say the word, maybe the first thing that people think about could be artificial intelligence. Maybe the second thing, or for some people, the first thing might be the company NVIDIA, because it's just in the news all the time. The cynical people out there might think of thematic investing as 15 different ways to own NVIDIA with a different weight, because it's in many different strategies. But Pierre, I wanted you to take us back to 2021, because one of the trickiest things with thematics, besides, the anecdote or the headline of the moment, it's very difficult to sort of give yourself any sort of foundation or benchmarking if you really start thinking about it. It's almost like we know what we're talking about when we see it, but if you press somebody and you said, okay, how do you tell if that strategy is good or if it's meeting the goal? Frequently, people realize they don't have as much grounding as they would have originally thought. So that inspired, I think, the paper that you wrote with some colleagues back in 2021.
Yeah, exactly. I mean, at the end of the day, thematic is a very vague term. in some way, right? Or it's not meant to be vague, but at least people use it in so many ways that it becomes vague, right, as a concept. And at WisdomTree, we are very much a research-driven house. And when we decided to build a range of thematic ETF, we also built the research that goes with it, right? So we have built a wide range of thematic research. And one of the foundation of this thematic research is very much this 2021 paper that we've called the thematic universe. And the inspiration for the paper was very much to try to answer those big questions that comes into people's head when we mention thematics. And in your question, you mentioned two of those big questions. One of them is, what are thematics really? And what are investors doing with thematics? Or where are the flow going? What is the performance of the different theme? And we realized very quickly that those questions were very difficult to answer and are still very difficult to answer, in fact. Like if I were to ask you, Chris, what's the performance of energy, you would probably go to Google, go to Bloomberg, have a look at S&P energy, and you would find an answer, right? If I ask you what's the performance of AI, or what's the performance of the battery theme, you would struggle quite a lot to find an answer to this. And so as part of our research, we built what we call the WisdomTree thematic classification, which is basically a collection of themes. So the idea is that we looked at the thematic universe, or we looked at all the fund and ETFs that exist globally, and we organized them inside a classification that has many layers. So you have the multi-thematic strategy at the top, then you're going to have more and more specialized strategy as you go down the tree, down to single theme. So single theme being cloud computing, batteries, clean energy. And so at this stage, we have around 45 themes in the classification. And so that gives us a map, right, of the universe. But what's really interesting is that we've then assigned a theme or a place in the classification for every single fund and ETF globally. And so we now have this classification which is filled with all the strategy. And so it's possible for us to look at how much AUM or how much assets there are in every theme, because we can just look at one theme, let's say cloud, look inside the box, how many ETF is there, how much asset is there in each of those ETF, in each of those mutual funds, sum it, bam, we have the AUM for cloud. Same thing for flows, and same thing for performance. And so by de facto, we created a benchmark for the theme, because if you look at the average performance of every single ETF, every single fund focused on one theme, then what you get is a benchmark in some way, and then you can start to assess if an ETF is doing better than its peers or less well than its peers. And that's fundamental, because there isn't a thematic classification that you can really find easily where you would be able to say, okay, what are the peers of this AI strategy I am considering? The second thing that we found in this paper is that once you've created those benchmark in some way, and once you've created those peer group for each theme, is that if you compare strategies that are doing the same thing in principle, that are trying to harness the same theme, and some themes are very narrow, right? We were talking about potentially metaverse, which is a very narrow theme, right? Even in those narrow themes, if you look at all of the ETF and strategies that are trying to invest in that theme, what we observe is a huge dispersion of both performance and holdings, which means that you can't just invest based on the name, based on what's written on the tin. You need to have a strategy, a way to select a thematic strategy or thematic funds. And that's really one of the core work that we've done in that paper, is to figure out how do you differentiate between different thematic strategies, because the end result of investing in ETF A or ETF B in a given theme could be widely different.
It's pretty remarkable, and I'll let the audience know. Essentially, if you come to the WisdomTree website, there's the original paper that was written in 2021, and then every month, what we're doing is essentially summarizing what's happening across the universe. So you might say, I'm interested to know the net inflows in mutual funds and ETFs across all of Europe for 2023, and you would be able to see that number. You'd be able to get a sense of how big of a year 2021 was, more than 100 billion USD going into the thematic space. 2022 and 2023 comparatively have been much quieter, even with all the noise and all the headlines of artificial intelligence. Like Pierre said, we're tracking roughly 45 distinct themes. So artificial intelligence is not the whole story. It's basically one of 44 others. The other thing that's been pretty amazing this year, and you see it evolving month by month, Pierre said it could matter quite a lot which strategy in a particular topic you select. Maybe it's a recovery rally this year more than anything else, but you take a topic like blockchain, and there are equity strategies that focus on blockchain. It's similar to metaverse in that it's not the broadest of categories, let's say. And this year to date, so we're talking about basically 7 to 8 months of performance, there are certain strategies that might be up a few hundred percent. There are other, again, also blockchain strategies which might be basically flat. It all depends on the way in which the stocks are selected, how narrow or how broad the case is. So this idea of benchmarking, this idea of selecting, it's a very important idea. Now, admittedly, more important in some strategies than others, but part of what we were trying to do was help people to understand if you're selecting a theme, how might you go about it? Now, we're also here to discuss, obviously, the idea of multi-thematic. And Pierre, I'm curious about, because one could say the idea of multi-thematic is geared towards having exposure to the themes, which are these bigger things that usually encompass many companies. But similarly, at the end of the day, you might also relate it to the idea of not wanting to miss out on certain companies, because and you illustrated it, I've seen it done before, where you go back to 1998, you basically in 1998, we have to just recognize there were things that maybe we thought we knew, and there are realities that have since transpired. But in 1998, if you just picked 10 relatively large stocks and let the portfolio ride, you would have to admit a lot of those stocks may not even be around. Maybe they lost 99% of their value. And similarly, maybe one of those stocks was Amazon, and Nvidia was actually around and trading as well. It wouldn't have been among the largest, but it was around. So it's not impossible to find winners in 1998, but it's also very difficult to avoid the losers. So if you're thinking of portfolio construction, Pierre, how do you go about this delicate balance of trying to find the right companies, avoiding the bad companies, avoiding the blowups? What are some ways to maybe go about it?
Yeah, that's an excellent question. At the end of the day, before you can build a multi-thematic portfolio, right, you have to think about what do you want to achieve, right? And at the end of the day, what we are trying to achieve with a multi-thematic portfolio is very much an above average growth by investing in tomorrow's big ideas, right? Like what we call theme, what we call megatrends are basically what's going to change the world going forward, being a technology, being something that happened in society. And so the idea is to invest in those big ideas, in those themes, to benefit from this growth. But so that's the first point to keep in mind when you build the portfolio is I want to be invested into those different big ideas because they're, like we said, there are 45 of them. Some of them are bigger, some of them are more important probably, but you want to be invested in enough of them that you're going to catch the big ones, right? But at the same time, what you're trying to achieve really from a financial point of view is find the mega caps of tomorrow's, right? If you look at the top 10 biggest company by market cap, like 10 years ago, 20 years ago, 30 years ago, they are very different. And very often you can see the theme or the big idea that drove them there. If you look at the 90s ranking, you'll find a lot of Japanese stock in there because the 80s was all about the rise of Japan, right? If you look at the current top 10, you'll find a lot of internet stock because 90s, 2000 was all about the internet changing the way we live profoundly, right? And so that's what we're trying to achieve. We're trying to use the theme because they signpost the mega caps of tomorrow. And that's, again, very important to remember because it leads to when you build the portfolios, when you build the multi-thematic portfolio, it guides you into what you want to do. And in this case, what you want to do is make sure that you get the future winners in the portfolio. You mentioned internet and how you would behave in 1998. I think that's very important. In 1998, you could have seen the internet as this big idea that you need to invest in. But if you were to invest only in Yahoo, you know that you would not have benefited from your vision, right? Because Yahoo didn't perform very well over those last 20 years. However, if you invested in Amazon, obviously the return would have been amazing. And this is really important to remember is that if you look over the very long term, or the long term, but let's say long to very long term, it's very much more important to get the winner in the portfolio than to avoid the losers. You can very much, the winner at the end of the day, they benefit from a winner takes all behavior of equity market, which is that the 2 or 3 big winners are going to have completely outsized return when the losers are going to lose 100%. They can't lose 200%, 300%, 400%. They can lose 100%. That's it. The winner, they can go 40x, 60x, right? And so as long as you get Amazon in the portfolio, it doesn't matter much if you got Yahoo, if you got Lycos or anything else in the portfolio, because Amazon is going to overweight, right, in terms of return, those losers, right? And so when you build your thematic portfolio, it's important to have multiple big ideas in your portfolio in a way that is diversified and not focus on only one theme, because there is always a possibility that another theme is going to be very important. But also it's very important to make sure that you have enough stock in the portfolio to have the winners in, right? And that's a very important lesson that I think a lot of managers do not follow enough.
And Pierre, it's good to delve into that one a bit more deeply. And I know when the paper becomes published, and if people want to go to our website and look at it, we're going to have a lot of charts in there that are very focused on this concept of what is the most appropriate number of stocks to have in a multi-thematic portfolio. What would you at least summarize, Pierre, for the audience here who might only be listening? How do you go about thinking of the right number of stocks for a portfolio like this?
Yeah, so it's important to mention, Chris, like you said, that after this first paper of 2021, we met a lot of clients. We had a lot of discussion around thematics, and a lot of the discussion were around portfolio construction, building multi-thematic portfolios, and so on. And that's why we wrote this second paper that is going to be published early October. And of course, the listener will be able to get it on the website at that point. And that second paper is very much about how do you build a thematic portfolio, how do you leverage the concept of thematic, the concept of megatrends in a multi-asset portfolio. And you're right that one of the big questions when you build a multi-thematic portfolio is how many stocks are you going to get in the portfolio? Why is it an important question? Is because if you look at the current offering in terms of multi-thematic ETF or multi-thematic mutual fund globally, the average number of stocks in those type of portfolio is 99, right? 99 stocks to cover all the thematics in the world. What's important, like for context, is to think about how many stocks is there in single theme ETF or funds, right? And what you'll notice is that it is basically around 100 as well. Semiconductor is a bit smaller, it's around 50. The theme we call equality, diversity, and inclusion is the biggest, is around 200. But on average, most theme and we'll have funds and ETFs that have around 100 stocks. And so you ask yourself, does it make sense that if I invest in AI, I'm going to have 100 stock? If I invest in energy storage, I'm going to have 100 stock. But if I invest in all those themes together in one product, I'm still going to have 100 stock. Because that raises the question of, but then which stock are they? Like which, if we summarize and we say, oh, there is only 10 theme in my multi-thematic, it's only 10 stock per theme, right? So which are the 10 stock in battery that the manager picked, and which are the 90 that he did not pick? Sorry. And so that's not really a question we want to ask ourselves, right? This question about which 10 do you pick in the battery ETF. In our view, it makes more sense to have more stocks, right? Because if you take 10 theme and you have around 100 stock per theme, then it gives you a 1,000 stock portfolio. Maybe 1,000 is not the answer, but it feels like it makes more sense as a starting point than 100, right? The issue with the 100 is that either you remove so many stocks in each theme that you may miss the winners, right? In some way, you try to be too selective. You looked at your internet tech stock in 98, you look at the 10 biggest stocks, and you have Yahoo, you have Amazon, you have Lycos, and so on in there, and you decided, I'll pick one. The likelihood you picked Amazon is very low, right? Or what you do is you invest into stocks or companies that kind of tick a lot of boxes. So you're going to say today, I'm going to buy Google because Google is doing some AI. They're doing some search. They're going a little bit of mobility with self-driving vehicle. And so you pick those stocks because they tick a lot of themes in one go, right? But what you end up doing is you end up concentrating your portfolio around companies that in some way have arrived, are already big, and so the potential for growth is less. So either you concentrate your portfolio in large companies that have less of a growth potential, or you have to be over selective with your portfolio, and you're going to miss the big winners potentially for the themes. So 100 seems a very hard proposition, which is why in the paper we have looked at quite a lot of analysis to try to figure out how many stocks do you need, right? And of course there isn't an answer. But what we found out is that if you are looking between 500 to 1,000 stock, that's probably where the sweet spot is. Because if you think about the equity universe, let's look at, for example, the MSCI ACWI, so all country IMI, right? So small cap, mid cap, large cap, it's around 10,000 stock, right? If you buy all of them, the 10,000 stock, you're going to get the winners and the mega cap of tomorrow, right? By definition. But of course, their weight is going to be very diluted. If you buy only 100 stock, so 1% of them, right? One stock out of 100, the likelihood you get the winner in is low. and therefore your return may not be great because you may have picked the wrong stocks. By using a thematic lens, by saying I'm going to invest only in thematic stocks and I'm going to keep out of my portfolio the non-thematic stocks, right? You can basically get a better, more concentrated portfolio with more chance to have the winner in, but at the same time have less stocks than 10,000, right? And so you could think that if you buy between 500 and 1,000 stock, obviously each stock is going to have a bigger weight than in the market index, but you haven't over concentrated your portfolio and you still have quite a large chance to have invested in tomorrow's winner because you used this thematic lens. And so that's really where we start from in some way, is this diversified portfolio that still concentrate the thematic stocks inside and focus on pure players to try to really get all the winners in.
Now, there's the selection of the stocks and thinking of the number of stocks, which we just went through. We also took and Pierre, you did something within the team that admittedly, and it could partly be because I'm based in the US, and in the US we don't tend to talk about these sustainable development goals. At least if people are talking about them, I'm personally not hearing as much. But essentially, thinking about theme selection and aligning theme selection back to the UN's sustainable development goals. And I'm just curious if you could walk through how in the world that's even actually tracked and done, because admittedly, like I said, I did not know it was possible to directly map themes back to sustainable development goals.
Yeah, so I mean, like you said, right? If you think about a construction of a multi-thematic portfolio, in our view, there is really three steps. There is first selecting the theme, then there is going to be weighting the theme, and we can talk about strategic and tactical weighting, but basically there is weighting the theme, and then there is going to be the stock selection inside the theme. So we talked a little bit about stock selection. Let's talk about theme selection. Theme selection is really about conviction and diversification, right? So it's about finding the themes that have the most chance to be transformative, right? So there are 45 themes in the classification. Maybe some of them are going to be more transformative than others, and you want them to be in your portfolio. And then there is diversification, because each theme is very different, in fact. And even if we say thematics as if it was one box, right? It's in fact 45 box, and they're all very different. AI and clean energy, they don't move the same. So when you build your multi-thematic, or when you build your theme selection, you want to both have the big ideas, but also themes that are very different. Now, coming back to conviction, of course, you can have a personal conviction, right? And that's going to be part of the process. But you also have to ask yourself, how do I know which ideas are going to be structural, are going to be transformative, right? And in some way, the United Nations, they signpost them for you because they've created these sustainable development goals, right? Which are goals that most governments around the world are going to try to hit. And of course, there is not a specific goal, but it's more to try to improve, right? And so what we are going to see is structural tailwinds for those goals, and therefore for the companies that are aligned with those goals, right? If the UN is saying we want clean energy, you're going to have a lot of incentives for country, for regulators to align themselves to those goals. And we've seen a lot of that with the Inflation Reduction Act and with other regulation and incentive fiscal measures passed around the world. Now, once you've said that, the big question is, how do you know which themes are aligned or not aligned to sustainable development goals? And clearly in Europe, that's a big question, probably bigger than in the US, but in Europe, we have quite a lot of data providers that are doing ESG data, right? And they've extended usually their data sets to SDG data as well. And so now you can find with some providers. In our case, we use Sustainalytics, but in their dataset, you can find for each company how their revenue align to the different sustainable development goals from the UN. So you're going to be able to see, okay, Tesla, X% of the revenue is aligned to this SDG, X% is aligned to that SDG, right? And therefore, the beauty of having the thematic classification is that we can aggregate this company data up to the theme, right? Because for each theme, we have a collection of ETF. Each ETF itself is a collection of stocks with weights. And so you can aggregate over multiple levels, right? Aggregate the SDG exposure for each company, then aggregate them for each ETF, then aggregate all of the ETF together in one theme. And then you can look at which theme are more aligned to those sustainable development goals. And that's going to give you some indication of which theme can have potentially bigger structural tailwinds than others.
And in thinking about, because part of what we have to do is we're thinking about companies, we're thinking about themes, we're lining up with the sustainable development goals for very good reason. Some of the analysis that I've seen you do and I've seen sort of showcased in different charts is something that happens to the portfolio. And you kind of showed it in an interesting way where it's almost like you're basically saying, let's do it randomly. Let's randomly select 3 themes, 6 themes, 9 themes, etc. And you see what happens with the possible sort of distribution of outcomes and returns. How do you arrive at what is viewed as the appropriate total number of themes? Because obviously we are tracking 45 distinct themes. We can't do all 45. So at the end of the day, is the right number around 10, around 20? How do you sort of zero in on the right total number of themes that should be in the portfolio?
Yeah, so that's an interesting question. I'm not sure there is one single answer, but what we think at least is that the answer is going to be basically, let's say above 10, right? Because you really want to get the diversification in the portfolio. You really want to get to benefit from the fact that those different themes, they behave completely different. And therefore, even if each theme by definition, right, is quite punchy because those are quite growthy portfolios with usually companies that are very early in their life cycle. So some of them don't really have earnings yet, or they're not profitable yet, right? So very early stage companies. So obviously the volatility is going to be high, the tracking error is going to be high, but because the themes are so different, you can combine them and get a very interesting outcome from a risk return point of view because you're going to mix themes that are behaving completely differently and they're all quite punchy together. I mean, on a one-to-one basis, but together it's going to be a lot more palatable, right? So let's say above 10 is probably where you want to be to really benefit from the diversification. Now, we talked about 45 themes, but if you look at those themes, some of them are very early in their development. Some of them are quite late in their development, and some of them are very close, right? And so if you think about building the multi-thematic portfolio, you're going to want to remove the themes that are too early, where there is really no way to build a portfolio that is sensible, that is pure play. And one theme that we could mention is metaverse. Metaverse feels very early. It is very hard to do a blockchain portfolio already, but doing a metaverse is in a pure play way with where you focus really on companies that have revenue that comes mostly from metaverse is I think at this point almost impossible. So for example, metaverse you would keep out because it's too hard and because it's impossible to get to a proper portfolio with publicly listed companies. And then you would have some themes that are too old, right? Or that have either played out already. So if you think about the internet, for example, okay, obviously it's not 100%, but it has been played out. Or some of the theme, like something that was very much in vogue 20 years ago was the nanotubes, right? This is a theme that has not worked out in some way. It is a dead theme. So you would also remove those ones. So that would give you less theme, maybe like, let's say 25 to 30. And then, like I said, some themes are too similar to really benefit from diversification. And so there is value to focus on one. So for example, if you think about um, sustainable energy production, sustainable energy storage, and sustainable mobility, right? The companies that are involved in those three themes are quite similar, and so you could get away with only two themes instead of the full three, right? And so by combining all of those criteria, you're going to end up somewhere between 10 and 20 theme, really.
And there's an element as well, and you alluded to it earlier in the discussion, the idea of sort of the strategic versus tactical. And when I think of it, I basically am thinking, okay, you could make your selection. So you could do all this research, all this work, you find the appropriate number of themes, you make the allocations, and frequently when we're talking about the individual strategies, which we tend to do, if I'm talking to someone about artificial intelligence, I'm hoping that they're not just chasing the recent, say, trend of excitement around generative AI or NVIDIA or the Magnificent Seven, whatever the case may be, at least as of the time of this recording. Because the next 3 months, we know anything can happen. But if it's truly an AI mega trend, 5 years, 10 years from now, if we really have found something of importance, 5 years, 10 years from now, there should be significant growth and hopefully growth above that of what you would experience in, say, an MSCI, ACWI, IMI. At least that's why we're coming and discussing and talking about thematic investing. So when you're thinking strategic versus tactical, what are some guideposts or roadmaps or rules of thumb that you tend to start thinking about? Because that obviously is going to relate to the holding period and the degree of activity that you might see within your multi-thematic portfolio.
Yeah, no, that's actually right. At the end of the day, thematic investment is a long-term investment, right? We are talking about the mega cap of the next decade. We're talking about structural change that don't happen overnight, or technological breakthrough that also takes time to be fully adopted in societies, right? So it is a long-term investment. It is meant to be a long-term growth play. And that's why we have this concept of strategic thematic allocation, right? Which is basically theme selection, where you say, okay, here are the theme I am convinced about, and therefore I want to be invested in them. And our strong view is that once you've picked the theme, you should stay invested year in, year out, right? And you should not start going, I'll be in AI this year, and next year I won't be in AI, and so on, because there is a high likelihood you're going to miss the boat, right? In some way, it's very hard to know when a theme is going to explode, right? We see this year is a big AI year, and of course uh, the signal, or what launched this explosion in some way is the launch of ChatGPT, which obviously is an event that no one could have predicted unless you worked for OpenAI. And even then, you would not have been able to predict the effect that it would have globally. If you think about cloud and remote working and so such theme in 2020, you could not have predicted a COVID pandemic happening in March 2020, right? So very often theme, they behave, let's say, tactically based on very unpredictable exogenous situation, right? And so by being invested all the time, at least you make sure that you're going to benefit from those because you're always invested. And if you start to time too aggressively, you may completely miss those periods, and that would be very, very detrimental to the long-term performance. So that's kind of why the strategic side of things. Now, we still mention tactical because, as we just discussed, there is those periods where a theme is going to perform extremely strongly due to news, a technological breakthrough like ChatGPT, right? And there is some periods where the performance is going to be more depressed because the theme is a little bit more in the background, because the attention of the world is focused on something else, right? Now, what would be interesting is to be able to overweight and underweight, not go in or out, but just overweight, underweight around your strategic asset allocation into a tactical asset allocation to take into account those moves, right? So you would want to be able to say, it would be great if in the first half of 2023, I was overweight semiconductors and overweight AI. And it would be great if in 2022, I was underweight cloud and cybersecurity and so on. And so we looked at the type of signals that could be used, right? And what often comes back from investors, from discussion, from things you read in news is fundamentals, is this idea that you could time thematics by looking at how expensive is a company or how expensive is a theme or how fast is a theme or a company growing, right? We feel that this is extremely dangerous because many theme and many or the performance of the theme very often is driven by completely exogenous event. I mentioned COVID. I mentioned the launch of ChatGPT. These are not events you're going to predict through fundamentals. In fact, fundamentals could stop you from benefiting from this event. Like if we take the example of ChatGPT and NVIDIA. NVIDIA in November 2022, if you look at the sales growth of NVIDIA at the end of 2022, you see this downward trend. So a fundamental driven investor would say, oh, NVIDIA sales growth is going down. Maybe I'll underweight. Maybe I come out of NVIDIA, right? And if you extend the idea, maybe you come out of AI, maybe you underweight AI, right? And then you have ChatGPT, and that would have been the absolute wrong move because NVIDIA is going to go up 200% in the following 6 months, right? So fundamental is extremely tricky. And if you look at Amazon's fundamentals for the last 20 years, you'll see very, very hard to time Amazon because in period where Amazon was going up, and I'm talking about the stock price, 50% a year, right? The PE could be 2000. So if you're thinking, okay, I'm going to time Amazon with pricing, you'd never invest in Amazon. Who is going to pay 2000, right? So very, very tricky, the fundamentals. However, we have a tool in finance that tends to work very well to try to capture exogenous event. It's momentum. Momentum, by definition, is trend following. And so as soon as the event happens, it's going to create momentum in the companies that are part of the relevant theme. And by looking at momentum, you're going to be able to go in and overweight the theme relatively quickly after the event, right? And so you're going to be able to ride the wave, and that's really what it is. It is a wave that you can ride with that momentum signals. And so in our view, you can have your strategic thematic allocation where you select the theme you want to be invested in, year out. And then you can have some momentum signals based on price momentum that can allow you to overweight, underweight themes based on what is basically the mood of around those themes at a given point in time. And by doing that, you would probably be overweight blockchain, AI, and semiconductors today or this summer, right? And you would be underweight more of the green theme, so sustainable energy production, sustainable energy storage. You would be a bit underweight right now because the mood is a little bit more negative. But that would give you potentially a nice overlay on top of the strategic asset allocation.
And Pierre, when you think about and you get to that point where, okay, we've, got a certain number of themes, we've got a methodology to maybe trim and add and overweight and underweight, not necessarily go in and out. We're starting to put it all together, we'd probably be remiss to not think about the full package in the sense that we mentioned at the beginning, you've got this concept where you take a topic, blockchain, and in a given 8-month period in 2023, roughly speaking, you are in one construction of the blockchain theme. You're basically flat. You're in another construction of the blockchain theme, and you could be up close to 300%. So a 300% spread within the same topic. And this is the par for the course in the world where there really is no, as we said at the beginning, there's no exact blockchain benchmark. We don't really know what blockchain is supposed to be performing at any given time. And we just know we have this array of options with all sorts of different decisions being made and results and returns being achieved. So maybe none of the other 44 distinct topics is that crazy in the sense multiple hundreds of percentage points spread. But at the end of the day, and it's sort of in the 2021 paper, but I was wondering if you could highlight here ideas that people could think about that might benefit them if they're looking at individual themes, but might also benefit us when we're thinking of selecting a multi-theme portfolio, because all strategies within any one of these 45 distinct topics, they're certainly not equal at the end of the day.
No, that's exactly correct. You were saying blockchain is 100% or 300% spread, right? Just so we are clear, it is not. It is obviously the biggest spread, right? It is a very volatile theme. But if you look at the last 12 months, the average spread between the best and the worst strategy inside each theme is around 20 to 30%. So almost every single theme, you're going to have a spread of 20 to 30% over a 12 months period between the best and the worst thematic strategy inside the theme. So it is very much a topic across all of the theme. Now, when it comes to being stock selection inside the theme or strategy selection if you're looking to invest in a single theme, right? Which is what we were discussing in the paper in 2021, we really think you can look at 5 different things. The first thing is what we call clarity of theme, which is it is already quite difficult to do a thematic strategy on one theme. So it's important to stay focused. So if you're going to say, I want to select stocks in AI, then you need to select stocks that are doing AI. The issue I was mentioning earlier on with a lot of the multi-thematic portfolios that exist is that instead of saying, okay, let me look at AI and picking stocks in AI, I'll pick a few stocks or hopefully more than a few. Then you move to cloud, you pick some cloud stocks. It's more, the approach is more, let me pick some stocks that make sense in the AI, cloud, clean energy, battery storage world, and then they pick stocks that kind of tick multiple boxes. What you end up with is companies that are not really AI, not really cloud, not really battery, not really clean energy, and so that doesn't make sense. So for us, clarity of theme is important. If you pick a stocks, is because it is relevant for one theme that you're currently looking at. So if you're doing an AI ETF, you want to look at AI stock, and if you're doing a multi-thematic, you should think about this, about your multi-thematic as a portfolio with, let's say, 14 sleeves, and you're going to build 14 portfolio, one for each theme, right? No trying to find a stock that is going to eat everything at one go. Clarity of theme is very important. Once you've decided, okay, let me search for stocks in AI, what's important is expertise in AI. I mean, it sounds really stupid to say this, but it's really important to mention. If you pick stocks for AI, you need to understand AI. Most portfolio manager, what they understand is accounting, is strategy of companies, is basically making sense of, is this company having the right strategy? Is the strategy being executed properly? Is it a good quality company, and so on, right? Which is important, of course, but when it comes to thematics, it's step 2. step one is to figure out, is the company relevant for the theme? Like, is that company even doing something that's relevant to that theme? And that's something that fund managers are usually not that greatly equipped for, unless they have people that are specifically expert in that topic, right? And if I take an example for AI, I'll talk about Netflix. If you think about Netflix, they talk about AI all the time. They're going to say they have this algorithm that gives you the show you want to watch tonight at home. But is Netflix relevant for AI? Not really, because Netflix is a client in some way of AI. They are not developing they are not developing ChatGPT, right? If you're thinking about, I think AI is very important. Do I want to invest in OpenAI or do I want to invest in Netflix? I think the question or the answer to that question is very clear, right? And so expertise in the theme is very important because it allows you to figure out which company and which technology that the company is developing is relevant for the long-term trend of that theme or which isn't, right? So expertise is the second building blocks, let's call that. Third is pure play or purity of exposure, which means that once you figure out which company are exposed to the theme, you want to invest into companies that have a lot of beta to that theme. At the end of the day, we're trying to build portfolios that have high beta to the theme, because if we are right and that theme is very important, we want to get companies that are going to benefit many times of that growth of the theme, right? So you want high beta to the theme, so you want pure play company to the theme, which is why, again, you prefer to have companies that are doing only AI compared to companies that are doing a little bit of AI and a little bit of everything. Fourth, building blocks, we call it differentiation. What does that mean, differentiation? It means you're buying thematics usually as a complement of your equity exposure. So your core equity exposure usually is going to be an MSCI all country, it's going to be an S&P 500, is going to be a Nasdaq, why not? And so you want your thematic to be different. If you end up with exactly the same portfolio in your thematic that you have in your core, there is going to be no added value. So you want your stocks in your thematic to be different. And the second thing, in the context of a multi-thematic, you want the stock in the AI sleeve to be different from the stock in the cloud sleeve, which are different from the stock in the cybersecurity sleeve. If in every sleeve you buy NVIDIA, then your portfolio is NVIDIA and you benefit from none of the goal that you wanted to achieve with your multi-thematics, which was the diversification, which was playing multiple themes and so on. So differentiation is also important. And finally, the last building block is what we call transparency, discipline, and investability. Why? Because transparency is very, very important, because there is no benchmark, there is no peer group in thematics, and therefore the only tool as an investor that you have is the investment process. And so if you don't know the investment process, you can't judge what a strategy is doing. Investability, because we are talking about potentially relatively small cap orientated strategies, and therefore making sure that when building the portfolio, being a sub-sleeve of the multi-thematic or the full multi-thematic, it's important to be sure that the portfolio is going to be tradable and that is not going to be trading with huge transaction cost, for example, or is going to have enough liquidity to accept enough trading. And finally, discipline. Why discipline? Because again, there is no benchmark, there is no peer group, there is no it's very easy in thematics to get to follow the hype, right? It's very easy to try to convince yourself in 2020 that Tesla should be in every single thing, right? It's doing well, it's going up 200%, and very quickly you want to say, oh yeah, but Tesla, they have this self-driving thing, so it's an AI company. And oh yeah, but they are doing electric vehicles, so it's sustainable mobility. Oh, but don't they have this factory in Nevada where they do battery? So that's a battery company as well, right? And you end up with Tesla everywhere. That's something that's very dangerous because you lose all of your diversification between theme again. So discipline, very important. So really, with those 5 building blocks, it allows you to build 15 sub-portfolio for your multi-thematics really, that are very targeted, that are very high beta to the theme. And then because you have a clear allocation to every single theme you picked, because you can overweight and underweight the theme, you can benefit from the trends in the theme. And because you build your sub-sleeve, right, individually, you can keep a very clear view of your overweight and underweight in the theme, which is something you can't do if all the stocks kind of bleed in each other in each theme. And then, of course, you have the stock selection with high beta pure play companies that allows you to maximize your growth if your theme selection is correct.
Now, Pierre, as we bring it all together and thinking about that final part of the paper, which is going to, as you said, come out in October of 2023, and you start thinking the typical investor out there, they've got some exposure that might be benchmarked to an MSCI ACWI. We imagine they've got some exposure that might be at least related to the Bloomberg Global Aggregate Index, meaning they've got equities, they've got fixed income, and then they start adding a multi-thematic exposure because we imagine the typical investor is not putting 100% of their assets in just thematics. They're mixing it in to a whole suite of other distinct equity strategies. What does the time series and historical analysis show about what happens when you add thematics to, say, these more traditional or core-oriented asset classes?
Yeah, so that's something we looked at in the first paper and again in the second paper with two different analyses but similar results, which is that when you take an equity and fixed income type portfolio, for each level of volatility, you're going to have a mix that is the best historically. Usually you call that the efficient frontier. And so you're going to have a set of portfolios that for each level of volatility maximize return. And when you add to the mix a third asset, which is a multi-thematic, what you observe is that for almost every single level of volatility, this efficient frontier goes up a little bit, meaning that for every level of volatility, there is a portfolio that includes a thematic that is going to be better than any portfolio that does not include thematic. And so that means you improve the efficient frontier with a multi-thematic portfolio, and that indicates that there is interest to have a strategic holdings to multi-thematic in an equity fixed income type portfolio. Now, having said that, the natural question you're going to ask me is how much, right? How much multi-thematic would you add in that portfolio? And so what we observe again is we look at those portfolio on this new efficient frontier, this most efficient portfolio for every single volatility level, and we look at the holdings. And what we observe is that up to 4.5% of volatility, the portfolio is mostly fixed income. There is very little equity, and inside this equity, there is very little multi-thematic. But as soon as you reach 5 to 6% of target volatility, so very quickly, you see obviously the proportion of equity go up, and you see the proportion of multi-thematic in the equity sleeve go up. But what's really interesting is that between around 5% and 15% of volatility, so for most of the portfolio, realistically, the proportion of multi-thematic inside the equity sleeve is quite constant. So whatever the size of the equity sleeve in the portfolio, if you look inside the equity sleeve, you're going to have a split of around 70% for the whole country world, 30% for the multi-thematic. And that's true for 5% of volatility up to 15% of volatility.
Well, I think that's an excellent place for us to wrap up. It's been a great discussion. So I certainly want to thank all of our listeners to The Next Big Thing. And please rate the podcast, subscribe to the podcast if you like what you hear. And we'll look forward to being able to deliver our next episode. So, Pierre, thank you. And thank you, everyone, for listening today.